Stocks on Wall Street see a sharp sell-off as Trump ramps up his attacks on Fed Chair Powell, reigniting investor worries. Dow slides more than 970 points. Asian markets also open subdued. The GIFT Nifty is indicating a positive start for the Indian market. Oil prices fell more than 2% on signs of progress in talks between US and Iran, while investors remain concerned about economic headwinds from tariffs that could curb demand for the fuel. Gold, meanwhile, holds a steady near record high levels, buoyed by the sustained safe haven buying on US-China trade tensions and concerns about President Donald Trump's plans to overhaul the Federal Reserve. In a relief for banks, the Reserve Bank of India eases liquidity coverage ratio norms, giving them more flexibility in managing funds. Under the new guidelines, a digital deposit buffer has been halved to 2.5%, and a stable IMB-enabled retail deposit will now attract a 7.5% run-off rate. The government has announced a 12% provisional safeguard duty on 5 key categories of steel imports in order to shield the domestic industry from a sudden and significant rise in inbound shipments. The duty will remain in force for 200 days. PM Modi meets the US Vice President J.D. Vance last evening, where the two discussed trade and announced finalization of terms of reference for bilateral trade agreement negotiations. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast, and I'm Vinny Motiwala. Thank you so much for tuning in as always. But a quick look at what we're seeing in terms of the Asian markets. How have they opened up this morning? A mixed opening is what I'm seeing coming in for the Asian markets as of now. ASX 200 is trading in the red. We have Taiwan Index that's opened up with a decline of 0.5%. Hang Seng down 0.4%. The one that is trading with some bit of that positive thing and up move is the Shanghai. That's holding on to some bit of a gain of 0.2%. Nifty implied open. Let's look at that, right? Asian markets saw a bit of an underperformance yesterday versus the Indian markets as well. As of now, Nifty implied open, a mild bit of a positive start is what we're watching out for. Given that the handover from Asia as of now is not that exciting, US market handover is also not anything exciting. So that is some bit of the subduedness that we're seeing coming in for the Indian markets. Will we again move and see a strong up move versus the other markets is something that we'll watch out for. As of now, a bit of a muted start to a slight bit of a positive bias is what we're watching out for from the Indian markets. Now, like I was talking about the US market, right? Wall Street that ended lower with Dow Jones dropping almost 970 points. Looking at the S&P 500 and the Nasdaq composite, both slid more than 2%. This has marked the fourth straight losing session for the Dow as well as the Nasdaq. Concerns have come in about the threats to the independence of the Federal Reserve contributed to the drop in the US markets and the US dollar, as well as the rising Treasury yield that we saw coming in after President Donald Trump slammed the Federal Chair Jerome Powell in a social media post. Let's go across to CNBC's Bertha Coombs, who's getting us a wrap on what happened on Wall Street.
U.S. markets were down sharply across some major indexes in Monday trading, down more than 2% across the board as the president is taking aim at the chairman of the Federal Reserve, and traders see little evidence of progress on global trade deals. The Dow was down 972 points. The S&P 500 fell 125, while the tech-heavy Nasdaq was down 416 points. President Trump ramped up his attacks on Fed Chair Jerome Powell on Monday. In a Truth Social post, the president called Powell, quote, Mr. Too Late, a major loser, and warned that the economy could slow down if interest rates don't drop immediately. The hit against Powell comes as the White House says it is studying whether they can legally fire the head of the central bank before the end of his term next May. Powell has said the president cannot remove him under the law. And the Federal Trade Commission on Monday sued Uber, alleging deceptive business practices with the ride-sharing company's Uber One subscription. Regulators claim customers were wrongly promised savings when signing up, and that the company then made it difficult to cancel. Uber wrote in a statement that it was disappointed by the complaint and confident that the company would prevail in court. That's what's happening here in the U.S. Back over to you in Mumbai.
Thank you so much for that, Bertha. But let's move on. And Roger Ferguson, the former Federal Reserve's vice chairman, warned about that attacks on Fed's independence and trade policies may harm the U.S. market stability and the global trust in the dollar in the long term. Listen in.
Obviously, as with most people who have been following the independent central bank for years, I do not think these attacks should be happening. You just played a piece from my friend Austin Goolsbee, the president of the Chicago Fed. I agree with him wholeheartedly. It is unwise to call into question the independence of the Federal Reserve System, as it is to call into question the independence of any central bank. We've learned that credibility at the central bank is critical to exercising monetary policy and to creating, trust and confidence in the U.S. economy. We've already seen, international investors call into question, perhaps, the stability and reserve currency nature of the dollar. It is unusual to have equity markets down and the dollar go down as well. Normally, when equity markets are down, individuals look for dollars in order to buy, the fixed income, the riskless asset that the U.S. offers in terms of our treasuries. There's been less of that of late.
Let's also listen into the Chicago Fed President Austin Goolsbee discussing the state of economy and the Fed's inflation flight, rate path outlook, the Fed's independence, and more.
We've got short-run expectations about inflation going up, and people are expressing fear that we're going back to a kind of a 21 or 22 environment where prices are getting too high and inflation is starting to rage a little out of control. But the core long-run expectations not rising, at least in the market variance, I think that's a very important fact.
So that's all the global market action that we have for you all this morning. But how is all this going to be impacting your Indian markets and how are they going to be opening? A team of research is here to set you up for trade, tell you which are the important stocks to watch out for in today's trading session. First up, let's go across to Ria, who's here to tell us which are the important stocks to watch out for in today's trading session. Okay, before we go to Ria, actually, let's set you up for trade. And Vivek, first up, I'll come to you then. Which is it that is, what is the market setup looking like this morning? What are we watching out for today?
Well, good morning, Winnie. Well, it's a clear divergence that we are seeing, especially when you're comparing Indian markets to the rest of the globe. Indian markets, let's say, fifth straight session of gains, record highs as far as, certain banking pack was concerned. But have a look at the global markets. Global markets yesterday gave a very, very weak handover. All of the U.S. indices saw very deep cuts. Along with that, you did see a sell-off across most of the asset classes, with oil prices too tumbling almost a little over 2% yesterday. What held out was gold prices. Safe haven buying was seeing over there, and $3,400 an ounce is what gold prices managed to go ahead and surpass in yesterday's trading session, a fresh record high. Now, talking about the Indian markets yesterday, fifth straight session of gains, Nifty Bank at record highs. Remember, the banking pack will be in focus yesterday. The RBI moves to go ahead and ease further liquidity is something that is seen as quite positive. So the banking pack will continue to remain in focus. Along with that, yesterday what was very surprising and a positive surprise was the fact that the Nifty IT pack rebounded very sharply from recent lows, despite the fact that both results as well as FY26 commentary was quite muted across most of the companies that have so far delivered the results for FY26 as well as Q4 FY25. What is it that the street will be watching out for? Key results today: HCL Tech, Havells, Tata Communications in the F&O pack. Along with that, Asian markets are taking weak cues from the global indices, GIFT Nifty both indicating a subdued start for our markets today.
Okay, subdued start is what we're expecting for our markets. And as of now, Nifty implied open, a very, very muted start is what is indicated there. Let's move on, and Ria is here. So Ria, which are the important stocks that we're keeping an eye out on this morning? Good morning.
Well, let's take a look at the stocks that are going to be in focus today. First up, we have Mahindra Logistics reporting its Q4 numbers. Now, the net loss has narrowed to 7.8 crores versus a loss of 12.9 crores that we saw in Q4 of last year. The EBITDA margin this time around has come in at 5% versus 3.9% in Q4 of last year. The company has also appointed Hemant Sikka, who was the president of the farm equipment business, to the CEO of Mahindra Logistics. Moving on, Himadri Specialty has also reported its Q4 numbers. The net profit has seen an increase of over 35% over the previous year, and the EBITDA margins have also seen quite a healthy expansion, coming in at 20.6% in this quarter versus 15.3% in Q4 of last year. And further, the board has also approved the 100% acquisition of Elixir Carbo for rupees 7.5 crores. Anant Raj in this quarter has seen an increase of over 52% in its net profit, and the EBITDA margins have also seen a healthy expansion, coming in at 26.3% versus 23.6% that we saw in Q4 of last year. Shifting away from earnings, banks will be in focus today. The RBI has announced amendments to the LCR framework, which will come into effect from the 1st of April 2026. The RBI has assigned additional runoff rates of 2.5% to IMB-enabled retail and small business consumer deposits versus the 5% that was proposed in the draft rules. Steel companies will also be in focus today, since the government has imposed a 12% safeguard duty on non-alloy and alloy steel flat products. Paytm will also be in focus today, since its arm Paytm Money has reduced interest rates and revised brokerages for its pay later margin trading facility. Keep your eye out on Coal India as well. The company has signed an MOU with Damodar Valley Corporation to set up two 800 megawatt ultra super power plants in Jharkhand. Tata Power will also be in focus, since its arm Tata Power Renewable Energy has signed a power purchase agreement with Tata Motors to set up 131 megawatts of wind solar hybrid projects. Also keep your eye out on HG Infra Engineering, since they have been declared as the qualified bidder by Gujarat Urja Vikas Nigam for setting up of standalone battery energy storage systems in Gujarat. And lastly, Gujarat Alkalis will be in focus today, since the company has set up a 30,000 TPA chlorotoluene plant at Dahej with an estimated project cost of 350 crores.
Thank you so much for that, Ria. But moving on, and lastly, we have Sudarshan, who's here to tell us which are the important cues in the world of FNO and what should we be keeping an eye out on. Good morning, Sudarshan.
Good morning, Vinny. So we have started the week on a very strong note, with market extending the gains to fifth straight day. That's the longest gaining streak in the last 1 month. And all the frontline indices were higher. For today, while global cues are negative, especially the cues that we are getting from mother market, Wall Street, all the major indices were sharply lower. But as far as GIFT Nifty is concerned, it has recovered from day's low. It has gained around 50 points from day's low, and it's indicating a flat start for today. As far as flows are concerned, yesterday both FIs and DIs were net buyers in the cash market, and it has happened for the first time in nearly 1 month. FIs have bought almost 2,000 crore, while more than 200 crore rupees were bought by DIs as well. Also in the derivative market, Qs are looking positive. In the index futures, FIs have bought almost 1,100 crore. They have added long positions of more than 6,500 contracts, and as far as addition of short positions are concerned, the addition was just around 550. And with this, FI's long exposure has now increased to 32%, is highest in almost 3 weeks. Now on the option front, two call options that were the most active. First, 24,200 has seen addition of more than 48 lakh shares. 24,300 has seen addition of nearly 38 lakh shares. And on the put side, addition was mainly seen in 24,000 and 24,100 put. Now support is immediate support will be around 24,050. If we slip below that, the next support comes around 23,900. As far as resistance is concerned, it's around 24,225. 5 stocks are in FNO band. New entrant is Tata Elxsi, and Nalco has come out of the FNO band.
Okay, Sudarshan, thank you so much for that. Surely you'll be keeping an eye out on those stocks in the world of FNO as well. But on that note, we're going to slip into a very short break. Up next, we'll bring you US and India as they announce the finalization of the terms of a reference for the bilateral trade agreement negotiations. Details on the other side. Welcome back to Power Breakfast on CNBC TV 18. Now, US Vice President Vance met with the PM Modi in New Delhi, and there has been a finalization of terms of reference for bilateral trade agreement negotiations between the two countries. Parikshit is joining in with us to give us more details on this one. Good morning, Parikshit.
PM Modi and US Vice President J.D. Vance noted the significant progress in trade negotiations between the two countries. Both leaders also formally announced the finalization of terms of reference for the bilateral trade agreement. Now, we know from sources that the terms of reference will have 19 chapters across goods, services, non-tariff barriers and customs facilitation as well. Now, the formal announcement of this terms of reference is a critical step forward in trade negotiations. In fact, the USTR, Jamieson Greer, went on to say that this will pave the way for a mutually beneficial trade deal between India and the United States. Now, while welcoming the developments in India, Jamieson Greer, the US trade representative, also said that there is a serious lack of reciprocity in the trade relationship with India. The US government says that while the average applied tariff by the United States is just 3.3%, the average applied tariff by India is as high as 17%. On top of that, American companies face a lot of non-tariff barriers in India which need to be addressed. Therefore, the US government's goal is to have a reciprocal trade relationship with India where the rights of American workers, American companies are respected and they get more market access and a level playing field as well. The Prime Minister thanked J.D. Vance for visiting his residence and also said that he looks forward to welcoming Donald Trump in India later this year. So it seems that talks between India and the US are on the right track, but clearly there are certain issues around agriculture, dairy and non-tariff barriers which are yet to be resolved.
Thank you so much for that, Parikshit. But let's move on. And a relief for banks. The Reserve Bank of India has eased liquidity coverage ratio norms, giving them more flexibility in managing funds. Ritu is joining with us on the phone line to give us more details on this one.
Good morning, Winnie. RBI has released this much-anticipated final rule on how LCR will be calculated. And it's a huge breather for banks because these amended rules are less stringent than what was proposed in the draft earlier, and they will only come into force from the next financial year, that is FY27. So to begin with, banks are required to set aside lower stock of liquid assets against the deposits that they raise through digital channels. So RBI has prescribed now an additional runoff rate of 2.5% to internet and mobile banking enabled retail and small business customer deposits versus 5% that was proposed in the draft. Consequently, the stable internet and mobile banking enabled deposits will attract a 7.5% run rate now, and the less stable deposits about 12.5% run rate. Also, the final guidelines rationalize the composition of wholesale funding from these other legal entities, and therefore non-financial entities like trust, educational, charitable, etc., they're going to attract a lower runoff rate of 40% against 100% that is applicable currently. Now, as a result, RBI says the net impact of these measures will improve the LCR of banks by around 600 basis points, and banks will continue to be able to meet the minimum LCR requirements. Now, ICRA estimates the banking system's high-quality liquid assets that they maintain are at about 45 to 50 lakh crores, and therefore this move can free up lendable resources by almost 3 lakh crores and lead to a 1.4 to 1.5% potential increase in credit growth for the system.
Okay, Ritu, thank you so much for that. We'll surely keep an eye out on where this is headed as well. And banks also is something that we'll keep an eye out on today. But let's move on. And HCL Tech will report its Q4 earnings today. Rima is joining in with us with what one should be expecting from this IT company. Good morning, Rima.
Hi, good morning. So now the focus is going to be on the annual guidance. Now, Infosys gave an annual guidance of 0 to 3% while maintaining margins for FY26. The question is, what will HCL Tech guide for? Consensus expectations appear to be 2 to 4%, maybe 3 to 5%, or like Infosys, they could give a wider band of 3 percentage points, maybe a 2 to 5% or a 1 to 4%. But the mood around IT, going by the price action yesterday, two disappointing earnings seems to be that at least for now, all the bad news about the macro seems to be in the price. Now, so the key is going to be the FY26 guidance. Margins for HCL Tech for this year are likely to be maintained at 18 to 19%, similar to the margin guidance that they'd given last year. Now, for Q4, again, it assumes less importance, but here are the numbers. Dollar revenue growth is seen down 0.9%. Constant currency growth seen lower by 0.6%. And remember, all peers, whether it's TCS, Wipro or Infosys, they've reported a sequential revenue decline in Q4. One is seasonality, but particularly for HCL Tech, the company had flagged off that one of the large programs in retail came to an end in Q3 and it won't be there in Q4. So therefore, sequentially, there will be that impact. And also some of the discretionary projects, the new ones, are taking time to ramp up. Onto margins, 18.1%, lower than the 19.5% that we had last quarter, and that's on account of wage hikes and also on account of visa hikes. In fact, the company had indicated to us in an interview that Q4 margins will be lower than Q3. But as I said, keep your eye out on the FY26 guidance. 1 to 4%, shouldn't, or 2 to 5% shouldn't come as a surprise. Back to you.
Okay, Rima, thank you so much for that. And HCL Tech is surely something that we're keeping an eye out on. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll come back with more news and updates after the break. Welcome back to Power Breakfast on CNBC TV 18. Now let's move on. And President Donald Trump ratcheted up his pressure campaign on Federal Reserve Jerome Powell. In a post on Truth Social, he called Powell a major loser and warned that the U.S. economy could slow down unless interest rates fall immediately. Reacting to this, Evercore's ISI Vice Chairman Krishna Guha says that any attempt by Trump to fire Powell would likely trigger a steep sell-off in the U.S. equity markets. Listen in.
It is clearly in the conceivable set. It's something that we have to take seriously, as a risk, and I think a serious risk to markets. I think we're already seeing, like right here and now, in the equity futures, in the dollar, in the bond yields, we're seeing a clear signal from the market that it doesn't like even the idea that the president might try to remove the Fed chair. There's been some loss of confidence in U.S. economic policy making in recent weeks. We've seen that in this very odd combination of upward pressure at times on longer term bond yields combined with a weaker dollar. That suggests global investors pulling capital out of the U.S. You've seen those inflation expectations well behaved, well anchored. And that's what will eventually allow the Fed to be able to cut rates when we get to the point that unemployment has increased materially. But if you start to raise questions about Federal Reserve independence, you are raising the bar for the Federal Reserve to cut. If you actually did try to remove the Federal Reserve chairman, I think you would see a severe reaction in markets with yields higher, dollars lower, and equity selling off. I can't believe that that's what the administration is trying to achieve.
And moving on, Prime Minister Narendra Modi embarks on a two-day visit to Saudi Arabia at the invitation of the Crown Prince Mohammed bin Salman. This will be Prime Minister Modi's third visit to the country following earlier visits to Riyadh in 2016 and 2019. During the visit, Modi will meet Prince Salman in Jeddah to further deepen and strengthen the ties between the two nations and the economic defense partnership as well as political relationships between both the countries, and will also be discussed during this visit. So that is something interesting that we'll be keeping an eye out on. But that's all the time we have on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.